Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate reports, and trust me, sometimes they need decoding. Today, we're diving into the annual shareholder report of the Polaris Global Value Fund. I know it sounds super exciting, but we'll see if Polaris has some explaining to do, and we'll find out if this fund is worth your investment dollars or if it is just smoke and mirrors. The headline, well, it wasn't exactly a banner year. The fund underperformed its benchmark, the MSCI World Index, a broad measure of global stock performance. It sounds like Polaris Global Value Fund hoped to do better, so let's find out the details. First, let's be clear, this report covers January 1, 2024 to December 31, 2024, a full year. If you want to find even more information, there is a website listed. We are just going to focus on the report, as the name of this channel implies. Let's get straight to the numbers. How much does it cost to play this game? The report lays out the fund's expenses based on a hypothetical $10,000 investment. For every $10,000 you put in, the costs were $102. This translates to an expense ratio or percentage of your investment that goes to covering costs of 0.99%. Basically, for every $100 you invest, just under $1 goes to expenses. This fee is pretty standard for similar funds, but every percentage counts. Okay, time for the big question, how did they do? The MSCI World Index, that benchmark we mentioned, shot up 18.67% for the year. Growth stocks and US stocks really drove that growth. But here's the rub, Polaris Global Value Fund only returned 5.34%. That's a significant difference. The fund explains that it was more diversified than the index, holding fewer US stocks and more small and mid-cap companies that lagged behind, so diversification cost them gains. Digging a bit deeper, the report names the top contributors to the fund's performance. Companies like Allison Transmission Holdings, Williams Companies, and United Therapeutics helped boost returns. On the flip side, some holdings dragged down performance. Samsung Electronics, Teleperformance SE, CVS Health, Magna International, and OpenText were the biggest disappointments. It is hard to win them all, but let's keep looking. There's a chart showing the growth of a hypothetical $10,000 investment over the past 10 years compared to the MSCI World Index. It shows the ups and downs, which can be useful to get a feel of the fund. If you look at December 31, 2014, and compare it to the values 10 years later, the Polaris Global Value Fund ends up at $19,202, while the MSCI World Index ends up at $25,812. This means that there is a significant advantage to investing in the MSCI World Index during that period. Looking at the average annual total returns, the Polaris Global Value Fund shows 5.34% for 1 year, 5.53% for 5 years, and 6.74% for 10 years. The MSCI World Index tells a different story, 18.67% for 1 year, 11.17% for 5 years, and 9.95% for 10 years. The fund clearly underperformed in the past year and also lagged over the longer term. Some quick stats now. The fund's total net assets are about $408.9 million. Its portfolio holds 97 different investments, and its portfolio turnover rate is 17%. Portfolio turnover rate is how often the fund buys and sells, so this fund doesn't seem to trade too aggressively. The report lists the top 10 holdings, led by Allison Transmission Holdings, making up 2.14% of the fund's total investments. Breaking down the portfolio by geography, the United States makes up the largest chunk at 42.1%. Japan is second at 8.4%, followed by France at 7.1% and South Korea at 6.1%. In terms of sector allocation, financials dominate at 27.8%. Industrials and consumer discretionary stocks come in next at 13.2% and 13.1% respectively. Switching gears, the report confirms that the fund has a code of ethics for its top officers, which is standard practice. There were no changes to the code and no waivers granted during the period. Basically, no one got a free pass to do something shady, at least according to the report. The fund also has an audit committee financial expert, Mark Moyer. They are there to ensure financial integrity and are not interested, meaning they don't have conflicts of interest. Delving into the accounting side, the report details the fees paid to the principal accountant. Audit fees were $19,900. Tax fees were $3,600. The audit committee pre-approves all audit and non-audit services. Finally, the fund's top officers state that their disclosure controls and procedures are effective. This basically means they are confident that the information they are sharing is accurate and reliable. Also, there were no significant changes to their internal controls over financial reporting that would raise any alarm bells. So, what's the story here? On the numbers, the fund underperformed its benchmark. It's more diversified, which they argue held it back. Costs are in line with similar funds, so nothing stands out there. Risks, well, investment always carries risks, but the management seems confident in their controls. Does this make the Polaris Global Value Fund a bad investment? Not necessarily. Value investing can be a long game, and sometimes diversification does mean missing out on short-term gains. However, the consistent underperformance compared to its benchmark and the MSCI World Index over the past 1, 5, and 10 years are certainly concerning. The fund's strength lies in its diversified approach, which could provide downside protection in a market downturn. However, it's also its weakness, as it seems to limit upside potential when growth stocks are leading the charge. It is also a very diverse collection of countries and sectors, so if you want more sector or geographic focus, you will want to choose another fund. Ultimately, whether to invest in this fund depends on your individual investment goals and risk tolerance. If you're looking for a fund that closely tracks the broad market, this probably isn't it. But if you're a value investor who believes in diversification and is willing to be patient, it might be worth a closer look. Thanks for watching. If you enjoyed this analysis, hit that like button, leave a comment, and subscribe for more corporate decoding.